Have you ever wondered what the future of money looks like? Well, you're not alone. As we move into a more digital world, central banks are exploring the idea of creating their own central bank digital currency. But what exactly are CBDCs and how do they change the way that we use and interact with money? In this video, we'll dive into CBDCs and discuss what they mean for the future of finance. Also, we put a ton of time and energy into creating this content, so please like and subscribe if you want to see more of it. So first, let's start by asking Lee some fun questions. So the first question is, if you could eat one type of food for the rest of your life, what would it be? And the one thing to mention with this question is that it doesn't matter like how you feel in terms of like what the food is. So no matter what you choose, it'll be the same type of thing.
You know, you can't go wrong with just a filet steak, 8 ounce, cooked medium. You just can't go wrong with that. So I'd have to be a meat eater for the rest of my life.
A lot of people have been mentioning steaks as the one food that they would choose, and I'm all for it. I think it's a good choice. So I got another question for you here. Let's wind back the clock to 2020. I think starting in 2020, there's been so much activity since, and we're starting to see certain things play out today that probably stem from certain events that were happening back in 2020. So when you were looking at that initial bull run, in March of 2020, Bitcoin was near a bottom, right? It was just over 3K. And then you saw an enormous amount of money flooding the system, quantitative easing, money printing due to COVID. And you saw Bitcoin go on this massive, massive bull run into really what I would say is just an unbelievable amount of price action for any other industry, but we'd seen something like that in the Bitcoin industry before. So my question is how are you taking all this in at that point in time? And I'm going to follow that up after you say how you were taking it in at the time. What have you been surprised by now that you have the benefit of hindsight?
That's a good question. Well, I do know that the TBC and we were very lucky to kick things off in late 2019, early 2020, like when we did, because we probably would not have made it had we not had the advantage of a bull run. And the industry associations are very expensive to run, and companies join the TBC and they pay membership dues to do that, ranging from $400 to $40,000. So there's a big range of membership dues. And, in the very early days in COVID, when Bitcoin was at like 3,000 and 4,000, our membership dues were very low. And we had to discount our membership dues steeply to get people to join. But pretty quickly thereafter, when we started passing policy and affecting change and bringing Texas from like what the Brookings Institute called a laggard in the digital asset space as far as a regulatory environment to now one of the leading states in the country in a matter of three or 4 years, we got a lot of traction and a lot of companies wanted to join. So there is no substitute for just fortunate market timing. And so we came to the market at a good time when there was a big need for an industry association to voice these concepts. And we got lucky and we're now able to survive in a bear market because we had the fortune of starting in a bull market.
Yeah, it is crazy how big of an impact the market has. I know that markets affect every single industry, but in the mining industry, it is just so crazily amazing when it's going well and brutal when you see these crashes. It is a sight to behold.
In the coming decades, it'll become less severe, right? The dips will be shallower and the peaks will be less steep. And so the bull and bear markets will be, Bitcoin is such a new asset that it's still undergoing price discovery. We expect for these commodity swings to continue, but to be less severe after every cycle. I think a lot of analysts feel the same.
So when you're looking at what happened during that bull run and then into the bear market as things tumbled, you saw a lot of big mining companies go through a really tough time where many companies that were once considered the leaders of the industry all of a sudden were filing for bankruptcy. So can you explain through the lens of how you guys were viewing it, what really went on there? How is it that you had these massive companies that crumbled during the bear market?
Well, the conventional wisdom was grow your hash rate at all costs and achieve economies of scale. And that's not incorrect. It turned out to be incorrect because of various factors, but that is a strategy to pursue. It's not like a bad strategy. It's just one that a lot of people pursued, pretty much everybody pursued. And you have three factors that really crushed that strategy. One was the energy pricing going through the roof because of Russia's invasion of Ukraine and some other cyclical factors in energy markets. You've got the difficulty level increasing rapidly. And all of that while the Bitcoin price is dropping precipitously. So nobody thought that the hash rate could continue to grow at the levels that it did. Bitcoin drop as severe as we saw. People assume, well, Bitcoin drops, the hash rate's going to drop in a somewhat equal percentage. Not at all.
So I do want to discuss banks now that it's like the topic of the hour. Really, we've been in a crazy couple weeks. We're recording this on March 23rd for everyone listening. We've recently seen the collapse of these banks that really in the crypto industry, many of these banks were very crypto friendly. You're looking at Silvergate, you're seeing the collapse of Silicon Valley Bank, and there's a lot of uncertainty in the market right now. So from your perspective, how are you processing all of this? Do you think that this is just the beginning? Do you think that the Fed's going to come in and we're going to keep all the plates spinning and everything's going to be okay? How are you evaluating the landscape?
I love listening to Caitlin Long on this topic because she's very informed in the banking industry. One thing, though, that I've observed is that it would have been considered kind of crack pipe and conspiracy theory-esque to assume that a closure of a bank was related to the federal government's distaste for a specific industry. But we did see quite a few irregularities when it comes to how Signature in particular was treated. The other two banks were totally separate issues, and they had different balance sheets and different loans outstanding and different assets. But in general, these banks were long treasuries, and they took these treasuries out when rates were near zero, and with the unprecedented rate rises, you're just going to get crushed. And they got crushed, and a lot of other banks are getting crushed, but they've managed to escape thus far. I was surprised at the 25 basis point rise that we saw yesterday from the Fed. I thought that they would capitulate and go with a zero, a status quo. Their interest in fighting inflation was stronger than I anticipated. And so we saw the 25 basis point rise. I think the market was anticipating either 25% or zero, or 25 basis points, or zero. But, in the end, this is still fractional reserve banking, and there's going to be challenges and booms and busts. And I don't think it should be surprising to us. I also don't think it will be surprising that the federal government will get further into trouble by backstopping the banking sector.
I just don't really understand how this just keeps going on. I do understand because it's happening, but it just doesn't really make logical sense. So I want to talk with you about social media. I noticed that you're on Nostr. And so you're one of the few people out there that I feel like is actually on Nostr. I was surprised when I was looking through your Twitter feed. I didn't expect to see you on this new social media protocol. So my first question is, I've talked about Nostr on this podcast before, but my first question is, how did you hear about it and what prompted you to want to create an account? Because there are so many different platforms today, and it takes time, man, to stay up to date with everything that's going on and to go and spend time to create an account on a new social media. I don't even want to call it platform, but to interact with this new protocol and start trying to post on a new form of social media, it takes a lot of time and energy. So how did you hear about it and what made you want to participate?
Yeah, we've got our ear to the ground kind of in the Bitcoin world. And so heard about it, I guess, through the grapevine, through everybody that we know posting their Nostr key or NPub, I guess, on Twitter. Nostr to me is interesting because it's bringing the same level of decentralization to information that Bitcoin did to value transfer. So that was fascinating. I think it has a long way to go as far as UI and UX, but it'll get there. It will be interesting to see how it evolves because who knows? I mean, there needs to be. I've been talking to some people who are deep in the weeds on Nostr, and one of my initial concerns was, well, what if people are just using this for really bad stuff, right? Like things that we wouldn't want to talk about on a podcast. And posting like obscene stuff and things like that, because there's really no guardrails. And they were telling me about different relays and different ways to ensure that you're kind of in a community or within the bounds of sort of the ethical usage of the platform. So I'm interested to see how that develops and hopeful. Also, I'm on Zion, which got to give a shout out to Zion. They are a Bitcoin Lightning fueled and decentralized social media platform based in Austin. So I'm on there and just learning a little bit more about these new platforms, because the current platforms we have, again, are broken. And, it's sad to sort of watch the incentives play out in real time that traditional social media has created. And I think Zion and Nostr create better incentives and will probably have better outcomes. I'm sure there'll be challenges. I'm sure there'll be undesirable aspects to it, but there are better incentives. And so that's why I'm on them.
I agree with a lot of the things that you're saying. First off, about Nostr, I think that what it stands for is truly incredible. I like how it is like censorship-free social media. And what was interesting to me was that, let's say that you post something on Facebook, for example. That post doesn't get put on Twitter, Instagram, across all these other platforms. Whereas if you interact with Nostr's protocol, if you post something, it's like posting on one platform and having it posted to every single other platform. And when you combine that with the power of open source technology, you can very easily see a world where this just gets so much better so quickly. And it's been incredible to see how fast it's grown already. So I will tell people, if they're listening, though, if you go and try and interact with it and build a profile, the user interface leaves a lot to be desired, but it's getting better.
Yeah, it is. And it will continue to get better because people are excited about it. People are giving their time to build on it. And it is open source.
So I saw it was either a tweet or a podcast that you were on where you were talking about central bank digital currencies. And maybe it was also stable coins as well. Right now, this is almost like a topic of the time because there's all this craziness happening with the traditional financial system and then the beginnings of the central bank digital currency here in the United States. So I'd be curious to hear what your thoughts are on all this, how things are moving forward. And then are there any types of things that you think people should be paying attention to that maybe they're not paying attention to right now?
Yeah, we've had some dust ups recently with this Uniform Commercial Code updates in various states where there were some concerns brought up about central bank digital currencies. So that is a unique situation. I've got a lot of insight into it as we've met with professionals, ULC attorneys, which at ULC is Uniform Law Commission. And we've actually drafted bills that have changed the Texas Uniform Commercial Code in the past. And so this most recent round where we saw the governor of South Dakota veto the bill and the governor of Florida, Governor DeSantis, come out pretty strongly against central bank digital currencies. I think that's a good reaction from elected officials.
So the journey that I've been on with my views on central bank digital currencies, initially I started learning about them, I would say back in around 2018. Really early on when the concepts were first being thrown around. And what I liked about it initially was the technology potential of it, right? So if you think about it, better technology, you can solve more problems. Back to what we were talking about earlier. Oh, we could build a better type of currency. And then as time went on, I started realizing, okay, well, with a stronger type of currency, that could, in the wrong hands, take a bad turn very quickly. And that's when people started giving ideas of, in a hypothetical situation, insert your least favorite ruler from history, having control over a central bank digital currency. And you very quickly see social credit systems where certain people might not get approved for loans if they try and speak truth against the person in charge, or incentivizing spending for things that you might necessarily not want to spend money on, or just automatic taxation for things based on a policy that gets passed that isn't supported by the populace, but a leader might want to put forward, or just financially shutting you out if they don't like what you're saying, and just being able to do it very, very easily. And so I started hearing all these bad things that could happen with this technology and control over a currency. And then it's like slamming on the brakes saying, okay, we probably don't want this to happen. But it almost seems like I don't want to say inevitable, but it just seems like there's such a huge incentive. Going back to what we were talking about earlier, the incentives are aligned where if you are a government, you would want to have a currency like this. You would want to have better control over the monetary policy and have more flexibility in whatever you're trying to do. So it just seems like common sense for those in charge to want a central bank digital currency. You're seeing central bank digital currencies proliferating, might be the right word, across different parts of the world. And this is actually a question for you. I haven't looked into what's actually going on with central bank digital currencies today outside the US as much. Have you paid attention to any of the developments with CBDCs, central bank digital currencies abroad?
Variety of countries that are experimenting with them. I think I saw a figure where there was over 140 countries that had begun to experiment with central bank digital currencies. And so that's obviously a fair majority of all the countries that are out there. It is concerning, and undoubtedly that the incentives do tend towards that direction. I think in the United States, we have a chance to delay the advent of central bank digital currencies long enough for the private sector to establish best practices around privately issued stablecoins.
So before we sign off, I got one final question for you, but for everyone listening, how can they follow you and support the work that you're doing right now?
Yeah, they can follow us on social media, on YouTube. Texas Blockchain Council's YouTube channel is pretty strong. We have a lot of good content there. So I'm at Lee_Bratcher on Twitter, and we are TexasBlockchainCouncil.org online.
Amazing. So the last question I got for you is, what is the best piece of advice that you've ever received?
I would have to say, so this isn't one moment that this advice was delivered, but it was over the course of 18 years growing up in the house with my parents. My dad constantly modeled this advice, which was, you're not playing for the audience that you see in front of you. You're playing for the audience of your creator, and having an eternal perspective on things is far more important than having this very near-term perspective of how can I be most happy in the near term. So it's sort of almost like a stoic concept, but also rooted in Christian principles as well, of striving for having an audience of one, and instead of fear of man, I guess. Yet another piece of wisdom that I've not fully internalized, that I'm still trying to.
That is an incredible place to end it. Thank you so much for coming on, Lee. This has been a lot of fun.
Yeah, thanks for having me on, Will.
Okay. That was all I wanted to cover in today's video. I upload videos on Bitcoin and Bitcoin mining on this channel. So if that interests you, then subscribe. And if you want to hear how Brad Mills was mining 2 Bitcoin every single day, then click on this video right here. You're not going to want to miss it. That's it for me today. Until next time.
Inflation